Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now today's episode, we're talking about one of the more annoying things in the world of credit and finance, and that is when Uncle Sam comes and tries to get his hands on your hard-earned earnings. So if you want to know what he can and can't try to lay claim to when it comes to credit cards specifically, then this episode is for you. So go ahead, press the subscribe button. Let's get to work. Now, first things first, I have to say a typical obligatory disclaimer. Not necessarily tax advice, it's more so stuff I've learned researching, so you can use this as a guidepost, but definitely not anything official. So with that obligatoriness out of the way, we're going to run down all the ways you earn points. So we'll talk about multipliers, sign-up bonuses, bank bonuses, offers, retention offers, all that good stuff. Now, there's one thing we need to know here before we get started to have, I guess, some common ground. You'll notice a theme that either points are going to be slotted into something that's called a rebate, or it's actually be seen as income. And at the end, I'll tell you everything that you need to know to kind of prepare for tax season. But to start with this, what is a rebate? Well, if you're old enough to remember a time when you go into the phone store, so maybe you go into Verizon, for example, they would advertise the phone like the old school Motorola Razr phone with buttons on it. They would advertise it as a $500 phone after mail-in rebate. And so what that meant is you would have to buy the phone, you'd give the Verizon cashier maybe $600. And then you'd go home and you'd have to tear apart the box, pull off the UPC code on the back. You'd hope Verizon put the form in the mail that you needed. You'd staple your receipt to it. You'd mail it off. And somewhere between 8 and infinity weeks later, you may receive a check for $100. That $100 is the rebate on the phone. So you can kind of see how this works. You had to make a purchase of $600, jump through all those hoops, then you got a rebate. Now, luckily we don't really have to do this anymore because it was an awful process designed to hope that you forget to do it. But that's the same with credit cards. We can divide this up as if you had to make a purchase to get the savings or get the points, then that's a rebate. That's not actually income. So let's take a look at our first example and it will make sense. So if you start off, you talk about multipliers. So you use your Amex Gold card at the grocery store, Forex back. You had to make a purchase, you had to buy your groceries to get those 4x points back. So as a result, that is considered a rebate on your spend, and that is not taxable, right? So it's also important to note here, this will be the same as we go along. If you take those 4x points and let's say you transfer them out to Hilton or Amex or Hilton or Delta maybe, or you cash them out, as a statement credit or just mail me a check, what have you, still not taxable because it's based on the underlying points. So, that helps because then you can still go and do what you want with them and not have to worry. And that'll be true for all of us. Now, if we build on that, we take a look at sign-up bonuses. You know how sign-up bonuses work. Spend X amount of money and, however many days, and then you'll get your prize, basically, however many points it is or cash back. Again, same theme here. You had to spend money to get that, so that's considered a rebate. Even if you cash them out, transfer them, whatever, still not going to be taxable because it falls into the rebate space. So now we understand the relationship between that. Let's take a look at one other one here. And this time we're talking about referral bonuses, right? So credit cards come with, hey, you can get your friend to sign up through your referral link. Your friend gets it approved. You get 20,000 ultimate reward points, whatever it is. That, you can see you did not spend anything, you just maybe badgered your friend to use your referral link. That would end up being taxable because, again, it's almost like the card issuer is paying you as a contract employee, a 1099 employee, as almost a credit card marketer for them. You did not make a purchase. So, again, referral points going to be taxable. Now, if we continue on down the path here, let's take a look at retention offers. So if you're ever thinking about canceling a card with no annual fee, then you can call, or a card with an annual fee, sorry, you can call in and say, hey, I want to cancel this. What can you do for me? Sometimes they'll offer you a retention offer. Now, retention offers come in a few different flavors here. There are ones that require spending. There are ones that don't, and they just give you the points. And there are other ones where they just give you like a statement credit. To my knowledge, even when you don't have to do a spend one, these are not taxable either. I've had all three versions, and I've never received any tax documents. Again, we'll talk about later for these. So I would say retention offers works very similar to a sign-up bonus, and you're safe. Now, what else is there? There are offers like Amex offers, Chase offers, things like that. Well, those are going to, again, fall into the space of rebates. That's very much like adding a coupon to your credit card. So if you walk into a store with a coupon and use a coupon and save 5% on your purchase, whatever it may be, that's not taxable because, again, you had to make the purchase to get the savings. This is the exact same thing. You add the Amex offer to your card, spend the money, and then they'll give you the cash back or the points or whatever it is. So there you go. Now, another easy one to talk about, kind of adjacent to credit cards, is bank accounts that pay interest. So if you had a high yield savings account, which I don't even know who remembers a high yield savings account with the way rates have been for the last 2 years, but there's still interest out there. So if you earn interest, you've got 20 grand, your Ally account, whatever it is, interest is going to be considered income. It's actually called interest-based income, I think, and you will have to pay taxes on that, which is unfortunate, but hey, it's how it goes. Now, one other one in the bank account space we have here is bank account bonuses. With bank account bonuses, they often have rules. Like if you look at this Citizens one that I'm doing right now, make a direct deposit. And even though there is a debit card component of this that requires me to use my debit card to spend money, this is actually going to be considered like interest income in the bank size, and this would be taxable. And, in my opinion, it's kind of debatable because they make me use my debit card and spend money. But again, if you look at the terms and conditions of just about all these bank account bonuses, they are all going to say this is treated as interest-based income. So all those bank accounts, taxable. Now, still worth it because it's free money, right? So I don't think it's that bad. So I think that covers all the different ways at a quick level that we earn points or earn money in this game. So with the last part of this, I want to talk about how this works and what you can expect, and then kind of how I do it. Maybe these tips will help. Now, of course, if you have your own tax guide, that means, you're fine, right? You're fine. But, for the rest of us, January kind of kicks off tax season. Now, specifically, the IRS will have a date in mind where they say tax season is officially open, where you can file this stuff. Now, that kind of comes later. So what you can expect is all these financial institutions that you've done business with, they're going to start to send out what's called a 1099 form. I'll put this on screen here. So the 1099, I think, is actually a 1099 miscellaneous form. And they're going to send that out to you, and they're also going to send a copy to the government as well, I believe. Now, it's important to note that, one, banks value the points at 1 cent per point, which is great because, as we talked about, even if you transfer them out to a partner and you get 2-3 cents per point, the bank only concerns with what they value the point, and it's a penny per point. So that's what the valuation will be calculated as. Now, in the terms of a bank account bonus, they're going to list the actual cash value the same as with interest, but with points, 1 cent per point. Now, technically speaking, banks, financial institutions, even contractors and stuff, they're supposed to send out these 1099 forms for anything of $600 or more. However, a bank can send them out if you've gotten a penny from them. They can send them out, any amount in between that they feel comfortable with, but the requirement is $600. Now, again, even if they don't send one out, you're still supposed to file that as income because you got it. I mean, I don't know how many people keep track of their points as much as we do, but again, if they don't send you one, you're supposed to. Now, with that being said, one of the things is that I like to do is kind of set up a few folders in my computer for taxes, because I'm going to get documents from a lot of different places, right? You get real estate documents, you get from cards, from banks, you name it, right? All those bank account bonuses. Some will be mailed home to you, some will be emailed. It really kind of depends on if you've opted into their electronic delivery or not. And something that I'm learning is, just because you've closed an account, right? So I have a Discover bank account. I signed up, surprise, for a sign-up bonus. I closed the account, but it doesn't necessarily mean your profile is closed. And if your profile is still open, for example, Discover sent me an email that says, hey, your tax documents are ready. You have to download them from there. So be aware of that. Bank of America, on the other hand, I closed my account with them. After they paid me out, I can't get back into that thing at all. So you just kind of have to be aware. It is, unfortunately, our responsibility, as the government would say, to manage and keep track of all your 1099 documents and things like that. So, you might be some places to check, make sure your address is updated, that whole thing. So again, last thing I'll say here, organization definitely helps. I think technically financial institutions are supposed to have all their tax documents out by the end of January. That rarely happens. So a lot of tax documents will come trickling in for me through February. So as a result, personally, I tend to wait. I don't really see the rush to just file right away, especially because I know there's going to be a lot more stuff trickling in through the mail. So if you're someone who opens up a lot of accounts and does a lot of stuff, you might want to wait. If you're someone who just has a few cards and whatever, then, you'll know when you have all of your stuff. But again, if you've been keeping track, you're supposed to report it. So overall, final thought here, I definitely have my own opinions about how taxes work and everything. Some of it was mentioned earlier in the show, but the great thing here is that, one, it's keep in mind that if you're playing this game correctly, this is still free money, right? The one thing I get when I say I sign up for all these bank account bonuses, folks are like, yeah, but isn't that taxable? It is, yes, but if you even go back to that Citizens example, that's one direct deposit and like a bunch of debit card transactions, all of which had happened from this chair, so it's still like $400 free dollars. So yes, if the government, they're going to take their cut, fine, but it's not the same is when the government comes and taxes your bonus at the end of the year, and that's like a 38.5% rate, whatever it may be. And then number two, because they're still valuing the points at 1 cent per point. If you're playing the travel game, you definitely come out ahead. Cashback, unfortunately, kind of sucks because you're probably only going to cash out for 1 cent a point anyways. But overall, I still think it's worth it. Not that big of a deal. Although again, we probably should make this much easier to figure out how to do your taxes than us having to track the same documents that the government ends up getting. Again, the government almost knows how much you have within reason, so I don't know, but that's a rant for another day. But anyways, guys, if you like this one, drop me a thumbs up down below. If you found it particularly interesting, consider subscribing to the channel. Again, posting content just like this every Monday, Wednesday, and Friday. Of course, right back here every Sunday with all the news you can use in the week that was in credit and finance. Question for you is two things. One, let me know your tax process. What do you think about this? Do you have strong opinions on the government and how they tax things? And number two, I will likely be working on another video that shows you how you can potentially pay these taxes with a credit card. Wanted to get this one out first so it goes in some kind of sequential order. So definitely be on the lookout for that. But anyways, guys, that's going to do it for this one. As always, thank you so much for watching. I'll talk to you in the next one.